All right, guys, it's Angelo Christian with another great edition of Real Estate Insider. Today, we're pushing off again with our commercial finance, talking about apartment complex financing. If you're out there, you're looking to purchase an apartment complex or looking to refinance your existing apartment complex, that's what this show is about today. We got some very interesting topics around it. And we're going to be talking to Mr. Stan Abiasi. Thank you so much for coming to the studio, man. How are you?
Good.
Doing good? Awesome. We also have an aspiring apprentice that wants to learn about commercial lending. Mr. JC Hussein's here too. So today we're going to be talking and let Stan kind of take the stage and teach us about some of the competitive advantage that we offer if you're out there looking to purchase your apartment complex. And this is nationwide, guys. It doesn't matter if you're in New York. You're in Hawaii is cool too.
Oh yeah,
Hawaii,
yeah.
Orlando, Miami, Texas, North Carolina. So if you're out there and you're looking to purchase or refinance, we're going to talk about our competitive advantage, how we're different than the banks. So take the stage, my man. What's going on?
Oh, you know, trying to help people who actually want to do these things and they've been turned down by their bank.
Okay, so let's talk about that. So. When you say that they've been turned down by their bank, then give me an example about what you mean by that.
Well, like, a lot of people who buy real estate and, in this type of program, we're talking about people that have credit scores of 680, they're established.
Okay, so they have to have a 680 or higher credit score.
Okay. They're professional real estate investors. They've been doing this for a good number of years.
Gotcha.
They're successful at managing and, holding property. Or buying property, and for a rental purpose.
So they have experience, with apartment complex.
Yeah, absolutely.
Okay.
And so what these people are, and generally they've got pretty good net worth.
Okay.
They've done a really good job of building it.
Okay.
And they want to be rewarded for that.
Right.
And so what they're finding is capital is cheap. Unfortunately, they don't know where to get it. Okay. Because a lot of people think I'm just going to walk into my local bank who I've had a 20-year relationship with.
Okay.
And unfortunately, most of the time it's a community bank or it's a regional bank and it's a depository lender.
Yeah.
Okay. Unfortunately, what's happened, and I think this is probably since the crash, depository lenders are making it extremely difficult to buy multifamily apartment complexes.
That's true.
Even if you are creditworthy. Okay?
Wow.
Even if you have a lot of liquidity on your balance sheets and your personal financial statements, even if you have experience, I have a borrower, in the Austin area. Okay. He took on a hard money loan of about 10% and he went to his local bank, been doing this since the early 90s.
Okay.
Over 20 years of experience buying property.
Yeah. Wow.
Has over 100 million on his, and he got turned down by his bank.
Wow. He did.
Yeah. For a refi of a 12-unit property.
Wow, right? That's crazy, man.
Right, and he's got like 800 credit scores. And so what I'm finding is I've got an influx of very credit-worthy borrowers that are just telling me, look, I got turned down by my bank. I walked into my bank, I've got a 20-year relationship with them, and they're just not lending on it.
Okay, so what you're saying is how we're different is we can make a loan to people that meet those type of criteria where their bank is denying them, we can actually help them.
Absolutely. So what's happened is, Wall Street has figured out there's a void in the market because the depository lenders are focused more on the residential side. And they've left a void in the market as it relates to multifamily.
Okay.
Unless, the only way to really close, if you're buying an apartment complex, the only way to really close on with a depository lender is if you come to the table with more than 50%.
Yeah, that's insane. That's
and
a lot
you
of
do
money,
a personal guarantee.
Oh, wow.
Okay.
Yeah.
So you got to do a personal guarantee.
Okay.
Right? That's how you close with a depository. So what's happened is a lot of private equity funds and Wall Street money have started to look at this market and gone, man, these borrowers are more solid than people buying houses. That the Chases and Wells Fargos of the world, because they're depository lenders, have vacated.
Yeah. Yeah.
So why don't we offer some programs to these very credit-worthy borrowers that have lots of assets that have experience doing it, and let's give them the money.
Sure.
So my client in Austin is refining $1.5 million little 12-unit property that he's owned since '96.
Okay.
That he's got a 10-year, 10% interest rate on.
That's crazy that he'd even be paying that. Yeah.
Yeah, and his bank issued him a term sheet, P&I, and I'll get to why that's important in a second, at 6.25%.
The interest rate was 6.25%.
Yeah.
Okay.
So he came to me and he said, "What do I need to do?" So I went to one of our lending sources, and I said, "Look, here's a situation that does this." I said, "That guy's great. We'll give him a 4.84% interest rate."
Wow.
That's crazy.
So like a point and a half lower.
Yeah,
That's amazing. That is amazing. Yeah.
And on top of that, he's pulling cash out of the property.
Oh, that's awesome. That's awesome.
Pulling cash out of the property.
So let me just, I want to make sure that we just stop for a second. So we have somebody that had 800, we said 800 credit score.
Yeah, his credit scores are in the 800s.
Has a net worth of $6 million or so. He owns an apartment complex in Austin, Texas. His bank basically denies him, wants to charge him a 6.25. We're able to get the deal done, approve him. And this was Section 8 housing, right?
Yeah, Section 8. It's subsidized housing for veterans.
Oh, wow. And the interest rate was at 4.8, almost a full point and a half lower. That's insane.
Yeah, insane. Get this, though. Interest only.
And interest only.
Interest only.
That still exists?
Yeah.
Wow.
Interest only payments.
That is unbelievable.
Yep. So he got an interest only loan
on a
10-year on a commercial multifamily 12-unit property. A 10-year note with a 30-year amortization schedule.
Oh, wow.
Amazing.
Wow.
Yeah. And a lot of professional investors know this term, debt service coverage. Okay. It has to meet certain debt service coverage. Depository lenders always look at principal and interest. And some of them will even look at the taxes and insurance on top of that. Full PITI.
Right.
Okay. And then they'll come up with their debt service coverage.
Right.
These lenders in our capital sources only calculate DSCR on just the interest only if it's an interest only payment. They don't even include the principal.
Guys, if you're out there and you're looking to purchase or refinance your apartment complex, we do interest only financing on apartment complexes. No one else is doing this, guys. Give us a call. We'd love to help you, or you can click on the link below. If you're out there, it doesn't matter where you're at. That is unbelievable, man. That's crazy.
It's nationwide. It's for loan sizes from 1 to 6 million.
Okay, so the loan size has to be from at least 1 million to 6 million. Okay, gotcha. All right, so what are
your standard, less than 75, unit apartment complexes?
Okay, so if you're out there and you have less than a 75 unit apartment complex, you're somewhere between $1 to $6 million on the deal. Give us a call. We'd love to help you. Some of the things how we're different. What are some of the other things how we're different than the banks?
Yeah, I think, there's a streamlined underwriting process.
So you don't have to go through all the crap.
You don't have to go through the brain damage.
Yeah.
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 You close a loan with a depository lender.
Yeah.
That's commercial. It's a standard 5-6 month underwriting time to close a commercial property.
With a bank.
Yeah.
Okay.
Because a depository lender is gonna, they're gonna do soil tests for environmental. They're gonna order a very expensive appraisal. That takes a long time because those guys are in demand and there's not a lot of them. Okay. So appraisals take a while. So banks do that. This is a lot faster, streamlined. So, I got that client in Austin, 30 days ago, and we're closing probably second week. So about 45 days. Time.
Wow.
Yeah.
So basically a fourth of the time. So basically less headache, streamlined underwriting, faster closing. What else? Interest only. You also mentioned
non-recourse.
Non-recourse. That's huge, guys. That is huge. So you don't have to be the personal guarantor like your bank wants you to be. Most banks, pretty much all of them that I know, if you're buying an apartment complex, they want you to be a personal guarantor on the deal. That means you're on the hook if the thing flops. Here, you're not a personal guarantor. You're not on the hook. That's huge. That's massive.
Yeah.
Yeah.
Yeah. So, if for some reason, the property's occupancy goes down, you hire the wrong property manager and you can't keep up with the payments because you're using the rental income to support the debt payments, which is how they underwrite these loans. And you default, they just take the property and they leave you alone personally.
Wow.
Yeah.
That's awesome. Awesome.
Which your normal bank, which you have a quote unquote relationship with, will take you to the cleaners. Yeah.
You'll definitely have a deficiency judgment on it.
Yeah.
Okay. And now let me ask this. We get a lot of people that inquire that they're looking to do an acquisition, and let's say that the deal needs repairs. So how does that work?
Yeah. So on a limited basis, they will, depending on if the repairs make sense and they're not astronomical. Like if it needs a roof, or if it needs, some updating and stuff like that, then you can do it.
Okay.
They'll include the cost of the rehab into the purchase or refinance.
Okay, so it's financed in.
Yeah.
Do they do an as-built appraisal to determine the?
They do an as-built appraisal.
Okay.
Yeah, for future value.
Okay.
So they'll base the LTV, the risk, leverage on the future value. But you have to get a bid from a contractor. It's got to be detailed so they can see the scope of the work.
Yeah. Now let me ask you this: that's if it needs renovations. What about if they want to do improvements?
Up to a certain point, they'll include improvements.
Okay.
Yeah.
Yeah, because let's say that you can make the deal more attractive, right? Maybe you want to put a pool. I don't know, whatever.
Yeah.
A playground for the kids.
So again, this is on a case by case, which is why they should just call in and tell us what they want to do.
Right.
But if it makes sense, and it really enhances the property value and makes it easier to lease or it appreciate. It has a direct appreciative impact to the property. Then they'll let you do it.
Okay.
Because it enhances their lien position.
Well, no, of course. I just you're going to get. I just want to make sure the viewers know that we can also offer that. It's one of our competitive advantages. A lot of banks don't want to mess with it if it needs improvements, or it needs want to do upgrades. Obviously, if you have one that doesn't, we prefer that. But if you are looking at a deal that needs it, we can also service you on that too. So now you did mention earlier that that I guess another where we're competitive, how you helped your client that he had Section 8 income, whereas a lot of banks don't want to mess with government type incomes. Is that something that we can also cater to, those type of people?
Absolutely.
Okay.
And what's great is, I don't know why normal banks just don't like Section 8. They just don't like the word Section 8 because, unfortunately, you have to have a LURA, L-U-R-A, which the guys that buy Section 8 will know what that is, but it's restrictions on what you can and can't do. And banks don't like restrictions on property. We don't have that problem here.
Okay.
So
that's good.
What's interesting, though, is Section 8 housing is some of the best cash flowing multifamily you can get.
Guaranteed.
So guys that, because it's just they cash flow like pigs. And if they can't pay their rent, the government picks up the tab.
Wow.
Yep.
Yeah.
They subsidize it.
Yep.
So like in my my client's case, right? The VA said, look, the guy can afford up to $916 bucks a month, and we'll subsidize the rest. And he's charging like $1,000.
Oh wow! So the VA covers the $84. Okay.
Yeah.
Okay. Wow.
And they subsidize it. And if they can't pay their rent 1 month, then they'll pay the VA.
That's amazing. That's dude. That's awesome.
Yeah.
We got to get into the Section 8.
For sure.
So, okay. Now and then there was one thing that you brought up too on occupancy. I guess is there certain guidelines around occupancy?
Yeah. So 90% physical occupancy for 3-month average prior trailing.
What does that mean?
So that means like if you have 10 units, 9 of them need to be occupied.
Okay.
Okay. It's 90%.
Okay.
Right. But there is a chance it can go down to 85% for a trailing 3-month average prior to underwriting. Okay. Before underwriting, okay, they want to see 90%.
Okay.
After underwriting, you'll accept it down to 5%.
Okay, gotcha.
It loses 5%.
All right, so just so we're clear, guys, this deal that we're talking about today. This is not for it wouldn't be for distressed properties.
No, it's not.
Yeah, because they have to be occupied.
No, I mean if you are, they got to be occupied.
Yeah.
They got to be cash flowing properties. They got to be stabilized. And look, I got a lot of friends that own a bunch of. You own some multifamily properties.
Yeah.
I got some multifamily properties. I got a lot of friends that buy multifamily properties because they're great cash flowing assets.
Right.
Okay, and they just continue to go up, and they're a lot better than owning a single family property. Because you've got one place with a bunch of units that's throwing off all this cash.
Right.
So they're great investments. Right. But what's happened, without cheap financing, because these capital sources just started filling this void. Okay, it hasn't been this way forever.
Right.
Is my friends have had to go out and get 9, 10, 8% interest rates to finance these things, to close it.
Yeah.
And the cash flows still support that. But now, if you're one of those professional real estate investors that have great credit, and you've gone out and you've built a good rental portfolio, and you've had to do it with sub hard money like 7.5% interest.
Yeah.
You need to call us because we can recapitalize your
Oh,
portfolio
sure.
and lower your interest carry too.
Yeah.
And you'll have more cash flow on the property.
Yeah.
So that's the biggest thing that this does too.
Right.
Like my client out there, if we were just doing a straight rate and term and not taking cash out, he had to do a hard money loan at 10%.
Right.
I'm cutting his interest rate in half.
Yep.
That's crazy.
Now, is there any penalty on that deal?
It's a case by case.
Okay.
It's a yield maintenance penalty.
Okay.
But it depends on what the IRR of the property is and the debt service coverage.
Okay.
So it just depends when we get into the deal what the income of the property looks like, and that'll determine how they set if there's going to be a prepay or not. Or sometimes it's stepped down. It's not, it's standard.
Yeah.
Okay.
Wow. Guys. So I just want to take a minute to recap some of the compelling advantages if you're out there looking to purchase an apartment complex or refinance. Some of the things that we talked about is streamline underwriting guidelines, fast and easy closings. You do not have to be a personal guarantor. We do interest only. Okay, and it's nationwide. The debt service is calculated if you're doing interest only on interest only. Some of the requirements, like Stan mentioned, you do have to have a 680 or higher credit score. This is for apartment complexes 75 units or less, between 1 to 6 million. And we also do non-recourse. We also service for Section 8 housing and government fixed income type. We love that. And now, one of the things you said, it does have to be a 5-unit or greater, right?
Yes, that's exactly right. That's what I was about to mention. But tax abatements, Section 8 vouchers, and cooperatives too.
Okay, so if you're in New York or in the boroughs, you have
New York
a co-op.
Or Long Island, yeah.
Okay, so if you're in New York or Long Island, you're doing a co-op deal, we can do those for you. So if you're out there and you're listening to this on YouTube or Facebook or whatever, and you're doing and you have that type of property, we can definitely help you with that. So what else? Anything? I think those are the main. Yeah, if you're buying a deal that needs repairs, we can also help you with that. I think those are some of the huge compelling, and the interest rates are lower. You think that your bank is going to be the lowest rate? They're not. Okay, they're going to charge you a higher rate, and they really don't want to make the deal. Like Stan said, banks are tight right now. All right, if it's taking them 6 months, so we can close your deal in 45 days. That's going to be a lot faster, and then so you can get into the apartment faster. And now let me ask you this: on closing costs, you said that let's say someone's purchasing, they could get the seller to pay the closing, right?
They can get contribution from the seller.
Okay.
Absolutely.
Okay.
Like your standard home purchase, it's
right.
the same thing.
Okay.
Now, depending on the deal and what it looks like, and obviously the buyer coming in, okay? If the buyer is really liquid and creditworthy, they may allow, the seller to pay all of the closing costs if he wants to.
Yeah.
Okay. But if there's some, they may require, something depending on who you are and, what your financial profile is.
Okay. And I guess those are the main thing. And one of the things that if you're, let's say that somebody's aspiring to get into, acquiring properties, would they still, let's say they have a 680 credit, they have good tax returns, they can put the 25% down, but they don't own any apartment complexes. Could they still be eligible to apply?
Yeah, but that's a different program. We can still probably get some of the same features in there.
Okay.
Again, it's just a case by case. But I would tell aspiring, make sure that when you're looking at a deal and it's your first one, that you get at least a 60-day, look period, 30-day feasibility. And when you do the 30-day feasibility on these apartment complexes, you need whoever's representing you, like a commercial real estate agent, which I highly recommend you go get.
Okay.
Somebody that's experienced. You need to make sure your commercial real estate agent asks the seller for maintenance records, rent rolls. You need to get all of the leases so you can make sure that the rent roll is accurate with the leases. And then you need to get an inspection on the property. Okay. Especially if you're going to buy Section 8 housing, because a lot of times these owners of these places don't keep up with the property. And one of the things that will kill a deal, is if the property's not lendable.
Yeah.
Right? If the roof's too damaged, or if there's foundational problems, or you got issues with plumbing, the bank won't do it because the property just it needs to be, it's too much rehab, right? It's not worth it. So, I would say make sure that it covers that there's enough cash flow coming in that it can cover, at least a 1.5 times, your annualized debt service that you're trying to place on this. And if you have questions on that, you should call us and we'll explain that to you. Because trying to figure that out on your own is you'll be looking for a while. Just call us and we'll tell you how that works.
Okay, cool. That's awesome, man. So yeah, if you're out there in the world or in the United States and you're looking to purchase an apartment complex, or you currently own one and you're a real estate investor, please give us a call. We want to show you how we can help you and how we're different than the banks, how we can get you funded. You can click on the link below to fill out an application. You can also call us on the number here on the screen. We're looking forward to helping you with your financial goals in real estate. Thank you so much for checking out Real Estate Insider, guys. Stan, awesome. Thank you so much for having the studio. JC, let me before we let you go, you're the new guy on the block. What did you learn today?
I learned a lot about a great program that's available for investors looking at smaller apartment complexes. That I think it's a huge advantage with a lot of the things that Stan said. So. Again, still in the learning process, but I definitely I'm excited about this, and I'm hoping anybody that's watching this video right now to give me a call, and Stan a call, and we'll get this situated for you guys.
Cool, awesome. Thank you guys so much. Have a great weekend. Take care. Bye-bye.